Well, hello again. I'm Reynard, Boyce, the owner of Temple Mortgage, LLC. I almost said the owner of TikTok Mortgage, but that would be not quite the case. Well, I want to thank you for coming to one of these podcasts, reels, informational series that we've been putting together. As the owner of Temple Mortgage and my 30 years of experience, we feel uniquely qualified to advise you in various areas of financial services. Today, we're going to talk about equity. Water everywhere, but not a drop to drink. You're saying, what are you talking about? The fact that many of you have a ton of equity, but you just can't get your hands on it. And that can be a very frustrating situation and predicament to be in. And quite frankly, many of you have a ton of equity. And Philip, we get calls all the time. Persons have homes worth 130 that are paid off, 200 that are paid off or nearly paid off. And because of their credit score, you're saying, well, why can't they get their equity? Because of the credit score. And so once again, we're talking about the things that we can do versus what traditional banks will not do. And of course, as a sidebar, I'm not licensed everywhere, but I'm an influencer. I can educate you, teach you. So if you want to retain my services as a consultant, feel free to call me. You can hit me on my email, Reynard, REYNARDBOYCE @gmail. Because what we want to do is become a major influencer in the area of financial services education. So many people come on TikTok and they spit out a lot of stuff, but they don't really give you the hardcore facts. Many of them don't have the expertise. I've been at this 30 years. I served before I led, and that's a key thing. And if you understand anything about service, he who must be, Jesus said, who's going to be the greatest amongst you must first serve. So we're called to be servants, and in so serving, we want to teach you various nuances of mortgage banking. Now, you have this equity, but you can't get your hands on it. That's a huge issue, and it happens all the time. So many persons, because of the changes, the radical changes in the financial service industry and the economy, banks are making it increasingly hard, if not impossible, to get your hands on your equity if you don't have a credit score of at least 650 or better. So what do you do if you have a 580? What if you do if you had one late? What if you do if you were late on some consumer credit? Now you have $100,000 in equity, you have a real need, or you're an investor, you want to get some of your hands on it, and you can't get it. Well, simply put, at Temple Mortgage, we have a team of partners, hard money partners, and then yes, you're going to pay more. You're going to pay a lot more in rate. It's going to be 11, 12, 13. There's no need to get squeamish. Because we're not going to drop you off and leave you there. We're going to take you through one door, repair your credit, give you the money you need to make the necessary changes, enhancements to your credit, pay off the debts you need to pay off, clean your credit. You're now going to have a payment history, a good payment history that you're going to establish of just 6 months. And in 6 months, no more than a year, typically 6 months, we're going to bring you out of that 11, 12% rate, and we're going to put you in a 5 or 6. Maybe when the rates drop around election time, you could get a lower rate. So that's one mechanism. We have what is called or entitled non-qualified mortgages. Mortgage professionals refer to it as non-QM. And we can do non-QM mortgages for persons as low as a 580 score. You could have up to, I believe, 6 lates in the last 12 months, as long as you didn't go 90-day late. Or you could have 190-day late in the last 6 months and still take out cash. And that rate is probably 10 to 11%. And then, of course, we have true hard money lenders. So that's one area. And then we have private money lenders, our attorneys and other hedge fund managers. So we have a variety of persons that we can utilize to help you get cash out of your bank, out of your house. Well, your house is your bank, so maybe that was the right Freudian slip, because your equity is like a bank, and you have this vault of money and you just can't access it. So once we help you, I want to credit counsel you. I want to make sure you take a credit counseling class. We want to get some budgetary classes and make sure that you get yourself together. And in closing, I have a lady right now. She has a 700 score. 700 score, she's self-employed. She has an IRS debt. They're coming to take her house, by the way. She called me last night. and she was frantic. The banks won't help her. Of course, stop calling me last. It would help if you called me and I had enough time to work on it. So we've got the hurry up offense going. But guess what? We have a bank statement program with 12 months of bank statements, and she just sent me all 12 months of bank statements. Her LLC, proving that she's self-employed, and I'm going to be able to get her up to 85% of the cash out of her equity so that she can pay off an IRS lien or pending lien and save her house. So that's another mechanism. If you have great credit and you're self-employed, we can do a bank statement loan to help you get your cash out. So we have a variety of solutions for a variety of problems. Stay tuned for the next episode. We're going to talk about investors.